Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fine.
Good morning, everybody. Man, I thought that I was like on time and super early, but then, had a few hiccups starting the stream, and so not quite as ahead as I thought. But we're going to get retail sales here in a little bit. This is going to be an important number. We are expecting core retail sales month over month to be spot 2 versus a previous reading of spot 2, but the word on the street is that it's going to be higher. Zero Hedge in particular looking at credit card data, which has been pretty effective in the past at predicting this, and we've got this a couple of times. In fact, I think that it's going to be hotter than anticipated, and that could push yields up even more. Okay, so here comes the number. Actually, looks like it might be less. It is less. Spot 1 versus spot 3, and core negative spot 1 versus the expected spot 2. Okay, so that's probably going to really surprise the market. The amount of movement that we got off of that wasn't terrible, actually. It is pulling back real quickly, though. So that's kind of interesting. So yesterday I was like, screen is too far away. I think I should make text bigger, but I regret doing that. Okay, now they're really pushing up further. I'm kind of like, maybe I should have messed with that, but look at the liquidity in the micros is terrible. Let's see here. Yet I don't like the larger font because I fit less things in the start bar. Vincenzo C, hey, how have you been? I haven't seen you in a few years, I think it is. I remember Uzi. Everybody remembers Uzi. You just need to get a microphone and a camera, and we'll just let Uzi take over the stream every day, and I can sit and watch. That would be great. Let's see here. What am I doing here? Come on, move that. Okay, so first thing, I got to kill the pen because the pen died for some reason. Okay, charts. Oh, don't need that. Don't need that. That's what we want. Okay, so ZN, oh man. Retail sales being weaker than anticipated is really messes up the daily chart, doesn't it? Look at that. Okay, so we were kind of coming back down into this area and thought maybe we would test this. Now we're coming up and we're testing. So they've still got a ways to go before you're above yesterday's low or highs rather. 24. We are getting some Fed speakers at the moment too, by the way. It sounds like it's Feds Williams speaking. Okay, S&P 500 yesterday had a really strong rally. Notice, by the way, that although they did jump initially, it was a small jump and it is now fading and it is going the other way. So is this another bad news? Is bad news concerns about growth? I think it could be. Oh, you remember the earthquake, huh? Oh, this was been a long, long time, Vincenzo. That was like 2019, wasn't it? Oil had a bit of a jump, and I've seen some CTA models suggesting that the oil CTAs are going long now, so be careful out there in oil. Gold and silver kind of just meh. Copper is just not. So growth in China is just not looking good right now. Japanese yen continues. So there's some real weakness this overnight. Central bank head was speaking and kind of saying, well, we might pare back our bond buying and maybe we'll raise rates next time. But like, he is not inspiring a lot of confidence because the bank is being much more dovish than the market wants, and they are punishing the currency dearly for it, and it just keeps going down. Remember, all of this over here was like insane intervention. We're getting back to those levels. And then there's Bitcoin. Bitcoin continues to struggle, sitting just above 65,000. So, I know there's some things that I like about the larger font, but I don't think I like it overall. Okay, so I have a high. 20.5 was a high of some sort at some point, so that's interesting. So since I'm pretty open about shit I don't understand, that's a good quality to have. When I look at the 10-year futures options quotes, and let's say the ask is 01, does that mean it costs like one tick to buy it, like 1532? Oh, they are quoting it in 30 seconds? Well, no, if it's 01, then it would actually be 31.25. Okay, so I have to refresh my memory. The options are priced in a different the options are priced in a different size or whatever than the treasuries, and I can't remember if it's bigger or smaller. But I would always get that question wrong because I would forget that when it was like 01 over here, that it was actually, yeah, I would always screw it up. So I don't remember exactly. Let's see here. Some of these websites just don't work very well at the size that I have. I'm afraid to change it though. I'm gonna try changing it. This might screw things up, okay? Because I get like a red. Please wait, which is super scary. But I think it'll be okay. It also might rearrange all my windows, which will really piss me off, but hey. And it takes a long time. Okay, so it didn't screw my windows up. That's good. Everything looks normal again. That's good. Okay, so right here. I'm looking up in my book here, Uzi's question. Oh, was it not in commodity options? Maybe it was in the chapter on... No, because that's the last chapter. Now, the U.S. Treasury bond futures are quoted in 30 seconds of a point. Premiums for U.S. Treasury bond futures are quoted in points and 64ths of a point. Each 64th of a point equals 15.65. This is the minimum tick for options on T-bond futures. Oh, and they don't even tell us for the other ones. Because, like, if I can trade ZN by options and with a set and risk a set tick premium on it, that's not the worst thing in the world. Yes. Although I think 002. But those are treasuries. Okay, so if bond options are in 64ths, then are treasury options in 128ths? Guess we have to look. CME treasury options. Specs. Options. American options. 10-year note options contract specs. (1/64th of a point). Oh. Okay. So for 10-year note options, they are priced the same as the future. So it's in 64ths. So I think 01 means 1532. Or not 1532, it's like 15.625 or something like that, right? 1,000 divided by 64. Yeah, 15.625. Yep, and it's for one futures contract. That's correct. So now you see how things can get so big so quickly, right? Because if you buy one future, you're long a treasury future, and then you sell a put against it or sell a call against it, right? You sell a call against it. So now you're perfectly hedged 1-to-1, and presumably what you make on the option, you would lose on the future and vice versa. And all you would make is the money from the time decay, right? And your risk in that situation would be the implied volatility. Like if implied volatility goes way up and in the wrong direction, you'd lose so much from selling the option that it might max out your margin amounts, right? But even if you were trading like $1,000 account, like you could probably hold a lot of contracts, right? Like or rather not. I think that you're still held by like, so it's not like you can use the option in the future and that reduces the amount of margin that you have to hold per se, but it reduces your risk, right? So you can be trading like $1 million account and be using like all of the margin for that practically, well, or at least as much as like your reasonable. Oh, sorry, I just got reconnected. Anyways, so you could be using a lot of your margin, but the actual risk that you're taking on would be trivial, right? And so now you scale that up to it's a large institution doing this market making. Tens of thousands of contracts, right? You very quickly get to tens of thousands, hundreds of thousands of contracts because of the way that those are structured. It'd be nice to trade from one account instead of two. Yeah, I think that if you were going to be playing that game, you'd probably want to be on a broker like Trading Technology, unfortunately. I bet you could probably, how much would it take? Because I mean, well, it's like 2,500 is the margin for a 10-year, isn't it? So I think for it to make sense, you would probably want like a $10,000-$20,000 account, but you could make like a $10,000-$20,000 account and then just sell, just sell options and make the time expiration be theta gang and probably, and that would probably give you like above the risk-free rate of return, as long as there's not like a recession and the treasuries like shoot up like they did during COVID. When that happens, you'd want to dump it real quick, right? Or my portfolio literally has 1,000 times the amount that your Ninja. Well, there you go. I mean, you could do it from two accounts too. I don't know if that would hurt or help you. The thing that I would be concerned about is on sorry, what's the broker you said earlier on here, on E-Trade. I don't think that E-Trade would give you very good commissions on the options on futures, right? But I don't know if once you're starting to talk about, amounts over 100,000, then it's kind of like, why not just trade the bases, right? Why not just, buy a treasury and sell the future? Buy $100,000 treasury, sell the future, deliver the one, right? Make the bases. So that's what everybody else is doing. That seems like that's the biggest trade in the treasuries. I'm gonna close that. And that. And that. And that. And so I haven't heard a whole lot from the Fed speakers. I do have Barkin at 10 o'clock. And it looks like, okay, so the way that this treasury, can we talk about this for a second? I found the way that this treasury went to be a little, oh man, you don't even see it on this chart. Well, if we were to split things out into actually, let's do that. Duplicate in new tab and change it to like a 5-second. Can I do that? There we go. Now you can see it. So we had a good jump. It continued up for a little while, but it pulled back very, very hard. And then we kind of melted up to here and kind of started to, find an area to dig in. So I think that's a little different because a lot of them, it's been like a little bit sideways and then it continues up, you know? They're very different. They're very different. And, close tab. The change in cumulative delta from 2,000 to about 22,000. So about 20,000 net contracts long, but then 5,000 contracts back profit taking. So for retail sales, I mean, like on the initial move, 20,000 is about standard these days for a big piece of news. I kind of feel like this retail sales is bigger than that and could be like a $30, $40, $50,000 kind of difference on the day. So does that mean that I think that we're going to see further up? I suppose it's a possibility. Well, you know what? I haven't even done my notes. I'm so bad at this. You guys are supposed to remind me about these things. Okay, so we've got retail sales week. Let's note under that, bad news is bad for equities? Question marks. Seems like it was slightly bad for equities. Okay, we got some Fed speakers. Business inventories, does that really matter? I don't know if I'm gonna list that. Okay, JPY weak. Dollar strong. Dollar fairly strong. It was at 105 earlier. So I think that that's worth noting. Also, CTA's long into oil. So I think, I don't know what Fed speakers would say, but everything that I listed there says imbalance short. So I think that if I start to get some signs of meta order long. Oh wait. Retail, I'm crazy. This is incorrect. This is incorrect. Because retail sales weak means buy treasuries. JPY weak is sell treasuries, and CTA's long into oil is sell treasuries. But I think that the retail sales is actually slightly stronger than these other things. So it actually flows biased slightly long, only slightly. So that means that I could take a long, but I would need to see the flows in line with it, and I would be needing to pick up a good spot because I could expect some cross flows. And in fact, if we come back over to here, keep an eye on the Japanese yen, because you can see that after that strong move up, with everything else, the yen is retracing a lot more than the other instruments. Okay. I almost screwed up big time there. I don't know what's with me, because I'm feeling decently good today. Although I am sore. My shoulders in particular were really sore. Actually, they feel okay right now, but especially when I woke up, my shoulders felt so sore. I wonder if the way that I'm sleeping is maybe making my shoulders tired. Could that be the case? Except for that, I don't understand why it would make this part of the shoulder, because that's like going like this, and I'm like maybe like sleeping like this maybe sometimes. So that makes sense. But I feel sore right here on my side. That's weird. That might be like I don't know if that's actually muscle. Might be something else going on with me. But my elbow was okay yesterday, so there's that. That was good. That's good. Man. And you know what else? I know that you guys are probably bullish elbows. I hear you. As long as I'm not doing anything that allows the weight to like slam down on my elbow, so I've got to be really cautious about really good smooth lockout. It seems to be fine. It was fine yesterday. There's still swelling in it and everything, but it seems fine. That didn't have the like the tendons like freaking out sort of a thing. No, you're probably sick of hearing it, or you will get sick of hearing about it. But this desk, every time I come in and I sit at this desk, I just feel energized. It's like this tree is like, I am so grateful for you restoring me to an amazing, beautiful piece of wood that people can look at forever. And I am going to give you all of my spiritual energy to keep you going. It's so nice. Oh man, and the surface is so nice. I hang 5 minutes. Do you have one of those things that like flips you upside down? Hanging helped my shoulders. That's weird. It helps your shoulders? Yeah, that's what it is. It's an inversion table. I should get one of those. I don't think that it bothers me enough that I would get one. I will, I will take my lifting straps because, they help me keep my grip, and then I'll just hang from my pull-up bar, and that kind of, lets the tension off from your spine. It's a good stretch. You do dead hangs from your patio door frame. Oh, yeah. The other thing, I don't know. I just feel good right now overall. So I also bought some jerk blocks for my gym. Last week, I needed the blocks. And so I'm like, oh, it's going to be like that in this program. And if you don't have the blocks, then you just do it from the hang. And that's more strain on your back. So, I don't want that. So I was like, let's get the blocks, have the money if I can find some. And somebody put them up. And so I went, and it actually turned out to be somebody I knew. I should have looked at the who is, because it was on Facebook Marketplace. I should have looked at who was selling it, because I got there and I'm like, oh yes, I know you. Why was I bringing that? I don't know. Anyways, I went and I got them. And then there's nothing in my program this week that needs blocks. So I didn't need to get them like this week or anything. But, oh man, the garage feels completely different with those huge blocks in there. And I kind of like it. It feels more like a place. Feels more like a place instead of just some random corner with some weights in it. Have you ever traded options? So I've made a few plays with options on stocks. And in fact, so few though that I could probably detail them all out to you. I think that I've done it 3 times. One time, oh my gosh, this one was the first one was so crazy, I thought. And like I missed it. So I had some trouble. The oil, I thought that oil was bottoming. I'm looking at this and I'm like, I think oil is going to bottom. I think that we're going up to possibly $100 a barrel. 90, if not $100 a barrel. And we were like at 70 or something like that, right? So I was trying to swing with micro oil futures, and I just got absolutely decimated. And I think I lost like almost $1,000, I think, on the futures. messing around with that, which was kind of dumb. I did some dumb things because at one point I had a big win in there, and then anyways, it's embarrassing, but that was like way back in 2020, 2021 or something like that, right? This was 2021, early 2021, okay? And then so I'm like, okay, let's try this a different way, because I still believe in my thesis, and I'm just getting shaken out in the futures. So I went and I bought USO options, and I bought just like at the money calls, and then I bought like a month out. I bought a month out, so like I bought February or something like that, and it worked. It worked out, and I think that I made a net 2,000 or 3,000 on that trade. So like if you count the loss from the future, it was still a big win. And I didn't have to risk a whole lot because I was only spent like $300 on the option or something like that. So I made like 10 to 1 my risk. So that was great. Okay. But then the thing that was even crazier about it was that my options expired a month before Russia attacked Ukraine. So if I had decided to just go out 1 month further, I would have made Mondo money off of that one. That would have been great, right? Then there was another one where I bought options on my tech stock because I thought that they were a little bit too low, and it looked like we were getting a bounce in tech in the indexes. And that one worked for a little bit, but in the end expired worthless. And what would be the third time? I don't remember. Maybe there's not a third time. I think there is a third time, but I don't know which one it was. Oh, there's finger dents in the wood from doing dead hangs. Oh, that's interesting. Maxley? I don't recognize that name. Yeah, well, so it wasn't crude oil options. It was like USO, which is an oil ETF, and then I was doing options on the ETF. How does a losing options position impact your tradable equity? It depends on what kind of an option it is. So if I buy an option, that money is immediately taken out of my account, right? And then I still own the thing. It's just like when you buy stock, like, right? That money isn't cash anymore. It's the option. Okay. But if I am selling options, it's different. And I'm not sure if I recall what the rules are on this. I read a book about options once, and I think that it went into these sorts of things, but I don't remember. So when you sell an option, the money is credited to your account. Like, you sold the option, you make the money right then and there. But there is margin required to hold it. In futures, in futures, it's just, or options on futures, it's kind of like the same rules as the futures, right? Like, there's a margin that's required to hold it, and if you lose so much on it, then you'll have to put more money in the account, and they give you so much time to do that and all that sort of stuff, right? But for stock futures, I'm not sure. I think that on that, it probably depends on your broker too. Yeah, I think you can sell calls and naked calls and puts, but if you don't have the cash to buy the stock back, you're screwed. Yeah. Like, if you paid $200 to buy a call and it just gets its ass kicked, it will reflect in your floating P&L. Right. But the $200 total is taken out of your cash when you buy it. Right. So it's like, You pay the money up front, and then, you know, if the option doesn't make the money back, then you just don't make the money back. Now if it's profitable and you don't do anything, then on expiration, your broker will just automatically do things, right? Your broker will just automatically exercise it and sell the stock and make the money. And I think that if you actually want the shares, you usually have to tell them. This kind of gets into a weird place because this whole thing with GameStop, you know, there was a lot of question about, or I guess there would still be question about whether Roaring Kitty sold all of his options or if he executed some of them. The occultists, as I call them, all were saying that he exercised them. And the reason why they wanted to say that he exercised them was because they had this theory that the market maker wouldn't be able to produce the shares. Clearly, it's been long enough since settlement and nothing has happened that he got the shares if he was executing them. But I say that if he did execute them and buy the shares, that was dumb, because those options still have a week. Well, I mean, the options we're talking about, they expire this Friday, and he was doing this like last Tuesday or Wednesday, right? So there was still a week's worth of time value in them. So you would make more money by selling the option back and then buying the stock with the proceeds from selling the option rather than executing the options. So yeah, now that was interesting that he bought the exact amount that Ryan Cohen did in 2021. But man, this, you know, we didn't talk about it yesterday. It didn't even come up. I didn't even pop into my mind, but basically Roaring Kitty, he bought the stock. So let's come back here. So this was Thursday, right? Thursday, he finished selling his options and then he bought. So I'm making an assumption here, by the way. Oh, where's my pen? Hold on a second. We have to bring the pen back. Okay. So I'm making the assumption that this was him selling his options and this was him buying the stock. And that's what his impact was right there. Okay, for buying that many shares. Anyways, okay, so then on Friday, it kind of held and even rallied into the end of the day. And why? Well, all of the apes or the occultists were saying because they pushed back the shareholder meeting for technical issues, the shareholder meeting will be on Monday. And they were all anticipating something big from the shareholder meeting, like talking about doing an acquisition or something like that, right? And then Monday came and there was nothing interesting in the shareholder meeting at all. They won't even give forward guidance, which to me is like, are you kidding me? I can't believe I'm noticing, because I'm following those subreddits and I go and I read the Meltdown subreddit a lot, and then thus the other subreddit as a result. And I think they're giving up. I think that between the dilution and then nothing happening from Roaring Kitty buying and nothing happening from the shareholder meeting, that's basically like all of the catalysts that you could have. There's no more catalysts. So they're giving up. And you can see it here in this morning. We'll see in 20 minutes, but it's kind of looking like that they're going to open up down and have a decent sell on the open as well. Now, we calculated what Roaring Kitty's impact would be because he owns the shares from like 23 or something like that, right? But by my calculations, his break-even point is actually 26. If the price 26 is the point at which, if he started selling at that point, his impact would push it lower and take him to his break-even, and he would make nothing on it. Right? So below that, so we are now to, he's taking a loss on this trade. And I don't think that he really has more money to buy more or to do anything. So, like, there's not going to be new developments. And he hasn't posted another picture either, by the way. Maybe he will sell or is selling, and who knows? Who knows at that point? You know what though? When did he post? Well, he posted the Thursday, but has he posted since then? Come back and look. Oh, well, he has posted memes on Twitter. That's true. When I say he posted, I mean like a position update. Because here's the thing. When he was on that live stream, he was all saying this is like a long-term bet in the management of the company and all of these sorts of things. If he were to sell right now, wouldn't that contradict what he said on his live stream? That would start to build a case for manipulation then at that point. Could you imagine though, getting nailed for stock manipulation on a losing trade? That would be crazy. That would be crazy. Now I know that for a lot of you, because we're only interested in the treasuries or the equity indexes, that GameStop might be just like a pest. But this is an amazing opportunity to track order flows because we got like one large trader telling us what he's doing. So we can kind of game these things out and see how it goes. But, you know, so if I come back to a daily, okay. And yeah, I have volume on here. Okay. So really zoom in here. Okay. So like on the Thursday, he was trading 107 million. On Monday, it was 90 million. How many do you think it will be today? Well, you could, as we sell, you could see an even bigger spike, but you know, the lower the activity gets, the less the volume is, the more his impact is going to be. Okay, I see Octavia is taking the long. I'm guessing that is based on the timing. But I am not seeing what I was hoping to see. So I think I will just sit here with it, I guess. I might like try jumping on something late and just taking a little bit. Maybe you know, I don't know. I am saying I am gonna stick to that I don't think I can take something right now, and I need to see some more autocorrelation in the volume. But they've been tricky lately, so I think I gotta keep an eye on it. I might like be giving up on it, and that's when, you know, the meta order's gonna come in. Have you tried leaps? I've not. Leaps are expensive. I would probably need a much larger stock portfolio to do leaps. I wish though, you know, like in 2020, like the summer of 2020, if I had the ability to do leaps, I totally would have. Can you imagine where we'd be now? For somehow I've not found it specified which market making matching algorithm applies to the bonds on the CBOT. Somehow it says that it has been or will be changed from pro rata to first in, first out. I'm not quite sure because it says something different everywhere and it's quite unclear. Which one? So the first of all is I would take me a bit to find it, and I don't know if I really want to go on that wild goose chase, but there's a spreadsheet. There's a spreadsheet that tells you every instrument and all of the properties of them, and one of the properties is the fill algorithm. The only one that I have ever known to use a different fill algorithm is the 2-year. And it's changed back and forth. So I don't know, maybe they're talking, the stuff that you're seeing, Max, Lee, maybe that is them talking about changing the 2-year from pro rata to first in, first out. But I can tell you for sure, ZB, ZN, and ZF are all first in, first out. I'm thinking about buying Pfizer leaps. I don't know about an individual company. That's a lot more risky. But like when we've been in market, bear markets, buying leaps on the index just seems like a no-brainer to me. I guess I don't really know how they would have done post-COVID, but I know that in 2008 there was some guys that bought leaps and just made insane amounts of money from them. You think a new pandemic can come in the next 2 years? You know what though? I'm very skeptical that if a new quote-unquote pandemic happens, that they will react to it the same way. That it will turn into lock everything down, you have to get the vaccine or we're not going to let you participate in public and those sorts of things. I think it would be easy to say, this is the way that we react to this kind of threat. And if it happens again, that would be the threat. We'd do it again. But I think that there was a lot of political undertones to it. I'm not sure that the pandemic would have happened the way that it was if Donald Trump had not been president at the time. If Joe Biden was president during the pandemic, I think that the threshold to, let's shut things down would have been a lot higher. Also, to be honest, Donald Trump he was the one that said, okay, we're going to shut things down. Once he did that kind of like opened the floodgates a little bit. And another president might have decided not to do it, perhaps. I don't know. You know what? If it was me, what do you think? Am I delusional? I don't 100% remember what I thought at that time. But I remember this I think it was at Oxford, or there was some study where they were basically said, here's what we think will happen. And if that happens, the hospitals will be overwhelmed. So we need to flatten the curve, right? And I remember thinking at the time, like, well, models like that are like super flawed. Like everything that I know about modeling like that says that you're likely to screw it up. Right? And it turns out that's exactly what happened. That then everybody else took that model and were like, oh, there's so many bugs and problems in this. Like, it was crazy. And it was like, we shut everything down over this. So on top of that, is it Pfizer specifically? I don't remember which one it was. PFE is down right now. Isn't the reason that they're down because they got sued and they like pulled their COVID vaccine off of the market? Isn't that why it's down? So that's some real risk, and there could be further. Okay. So that's a real risk, and there could be further risks. So leaps on that one. Yeah, if it works out, it'll probably be amazing. If it works out on that one, it'll probably be amazing. But that would be big risk. And it would probably be expensive too. Because that's a $27 stock. Oh my gosh, I can only match. Okay, let's try and look at them. Let's try and look at them. Options. Pfizer. Okay, well, I don't think that like January 2026 are really leaps, are they? Those are basically quarterlies. Okay, but if we look quarterlies, oh, hey, actually, that's not what I expected at all. You could buy them for basically $400 or $500. Okay. You know what? For that one, like if we were just to, where could Pfizer be in a year from now? Could Pfizer be at $31 a year from now? I mean, it's feasible if there was a pandemic in the next year. So if I extrapolate that out to leaps, it might make sense. But if the leaps are like $40, then it's kind of turns into, I don't know about that, you know? Pandemics come in 4-year increments. You know, there has been, so I think what Uzi's referring to is there's been a lot of stories about, like, for instance, isn't there like a bird flu and it's hopped over to humans a few times, for instance? So a lot of people are concerned that they would pull the pandemic thing again, and that they, in particular, that they would use that to expand mail-in voter balloting and all of those sorts of things. But I actually think that what's going on right now is it's kind of that self-fulfilling prophecy. Like the news media, they know that that's, you know, the sort of thing that would be going on, or that what people are like worried about. And so every time that there's a story that's even remotely close to that, they like give it a higher profile than it otherwise would get. But I don't think that it's actually gonna happen. Pandemics are the new hurricane season. It will always be predicted to be a catastrophe, but you're in Florida. You're in northern Florida. I don't know if that... There's definitely been some people that have lost a lot in hurricanes, man. I mean, there are some countries that are basically just always in shambles because of hurricanes. They don't need the pandemic. They have plenty of mail-in ballots to print for illegals who have no idea it happened. I think one of the issues that you got right now, though, is that like what I would call establishment type of players. Let's not even call them establishment players. Like the Illuminati types. Okay. Not that I'm saying that there's like a global world cabal that controls world politics or anything like that, but there are billionaires that spend a lot of political money, like George Soros and those types of people, right? And in 2020, they were all very much just behind Joe Biden. It was just like, whatever it takes to get him over the finish line. It's not that this time. So from what I've seen, Donald Trump enjoys more support, like from across the board. He has more support amongst the hardcore conservatives. He has more support among immigrants, and he has more support amongst the business community and the rich investors. And then on top of that, the investment community is just like overall not pleased with Joe Biden. So there's a lot of people that are just kind of ambivalent. So I'm, now there are the Democrat operatives. There are the people that are like involved in elections or whatever, and maybe they're being dishonest. Maybe they've always, because there's always these stories about there's this election official in this county that we think is doing something shady or that. Like those people will still be there, right? How much of an impact they could have, I guess it remains to be seen. What about all those mail-in votes that came through early in the morning? Well, so basically what happens is this is they have all these laws about mail-in votes, and there's different rules that you can have about like when is it valid, right? Like if I mail in a mail-in ballot and it arrives like a year after the election, should that count in the election? Like, no, that's ridiculous, right? But if I mailed it on election day, should it still be valid? Does it have to get there on election day, or can it be like after that? And then it's like, well, what if I sent it 3 days before, but it actually took 4 days to get there? Then it would arrive a day after the election, right? So different states have different rules about this, okay? And what a lot of the Democrat kind of dominated states did is they basically said, as long as it is postmarked, because we can only control when it, you can only really look at when it was sent. So as long as the stamp on it, like the stamp that the post office puts on it, that basically says this is the day that we received it, as long as it was postmarked before election day, we'll take it. So what that means is that you can get ballots coming in 3 to 4 days after the election, right? And then on top of that, they like moved everybody to doing that. Like they tried to expand and get as many people to vote by mail as possible, right? Then on top of that, the rule is usually you're not allowed to start counting the ballots until after election day. So what that means is they can't get a head start. They can only start counting them after the election, and then they'll continue to get ballots for like 4 days, and in areas where it's really, really close. And that's how you get these situations where the race isn't decided until like several days afterwards, which is just absolutely bonkers, right? And then on top of that, some places gave less resources to the counting, so then they were slower at counting on top of that. And you know what? Some of these things are intentional. I can tell you, like straight up in Utah, if you are in a suburban area, a nice suburban area, you will go and there will be absolutely no line to vote. You'll just be like, where is everybody? Absolutely no line to vote. And if you are in some of the densest city areas that vote the most Democrat, you will have to wait 4 hours in line to vote. That's on purpose. It's on purpose. They allocate the resources differently and basically make it so that if you are in the high density area, you'll have to wait longer. Counting freezes in the middle of the night, sudden influx of mail-in ballots only for Biden. Yeah, you know what? That whole thing, I can't prove that like the election was stolen or that there was election fraud or anything like that. What I can say is that halting counting in the middle of the night, that alone is like, that never happens. They always count, come all the way through the night. Everybody knows that that's the way that it works. And then for them to like have stopped counting and then started counting before they said that they would is like bonkers to me. I kind of wonder if somebody came in and like here would be a plausible explanation. Something happened, something weird happened. Like it's weird. It's not normal. It's not. Plausible explanation. Somebody decided, oh, well, we're not going to get it done tonight, so let's just let these people go home. They told them that they were going to go home, and then some other election official, once they heard that, was like, no, that's not right. We're supposed to be counting all through the night. And so then they told them, you guys get back over there and you start counting again. Plausible explanation. I don't know. No. I don't think that's actually... So I'd consider my position to be fair. Halt the counts, wait for mail-in ballot dumps, but 100% for Biden. With the way that things were going in the pandemic, for the mail-in votes to be 100% for Biden wouldn't surprise me at all. Because it basically turned into all of the Democrats were all in on mail-in balloting, and so they all did theirs with mail-in, and all of the Republicans went on the day. And if that's the way that it's going to be, and you're going to get mail-in ballots 4 days after the election coming in, then that exactly what's going to happen is when you go to bed on election night, it's going to show the Republican winning, and then over the coming days, all of the Democrat votes come in and cancel it out. Like, that's exactly what you should expect. So that alone is not necessarily like suspicious. But the real problem here is that, in my opinion, mail-in balloting should never be allowed. We've had the mail for hundreds of years. Why did we never allow it until the last 50? I'll tell you why. Because it's not as secure of a voting system, and it harms trust in the elections. We should just get rid of it. We should have voter IDs. I think that there are a lot of political partisans that take the position that, like, I will push for whatever policy when it comes to voting that will help me. And I think that there's a lot of Democrats that do that, because the Democrats think that, you know, like, one of the issues that the Democrats are perpetually triggered about, and this goes back to the 2000 election with Bush versus Gore and all of that. Was it the 2000 election? Not the 2000. It was the 2004, wasn't it? No. Gore was 2000. 2004 was Bush versus the other guy. I was on my mission, so I missed 2004. Okay, 2000, right? And they all felt that the election had been stolen, and they feel that, like, Republicans are gerrymandering districts, and so they wouldn't have as many seats in the House if it wasn't for their gerrymandering. And, you know, there would be states that would be less Republican if the Republicans weren't suppressing voters. So one of the biggest issues that Democrats get triggered about is quote unquote voter suppression. And since they think that Republicans are intentionally voter suppressing, which maybe in some cases they were, although I think that the policies that the majority of Republicans want have nothing to do with that. They just think that that's what would be fair and secure. But anyways, so they kind of do the same thing that Republicans do, where they're like, well, if they're doing it, then we're going to play that game and we're going to play it twice as hard and we're going to win with that game, right? So then the Democrats do this, whatever kind of policy I can put in place that will possibly help me. Oh, mail-in balloting is likely to help the Democrat because it will be more Democrat voters will vote. Sure, then I'm going to do it, right? But I think that we should just have secure elections. I think that if you had all of these, like a voter ID was mandated nationwide, and mail-in balloting was banned, I don't think that it would have that huge of an impact, and it would do wonders for, trust in elections. But whatever. Okay, so that's kind of interesting. The treasuries had a pretty quick rise there, and they came right back down. And meanwhile, equities here off of this open seem to be taking off. You know what I was thinking about yesterday, because remember at the end of the stream yesterday, somebody came in and they're like, what do you think about index futures? And I was like, well, I don't know of anything that suggests long or short in the equity indexes. I'm sure that I could go through and I could look at stock buybacks and all of these other things and say it's probably going to be buy or whatever the deal is. But I just don't have that kind of information for equity indexes, and I don't track it as well. But, I was like, well, but I would probably be leaning on the long side. But yesterday ended up being a really, really strong rally. And now here on the open, you're getting another pretty strong rally. Now, I wonder how far they get. Let's see how far they get, because if we're really concerned about growth, shouldn't that rally be short-lived? Maybe it doesn't matter. Okay, here's the treasuries. Are they coming back up again? Well, they're at 19.5. They went as low as 18. That kind of makes me want to get involved. I still don't see like evidence of a meta order long though, and why are the treasuries getting so volatile here? It's kind of interesting. In the treasuries, summer action tends to be like just really, really range bound. But what seems to be happening these first few weeks is, yeah, you'll get these really quiet moments, but you'll also get increased volatility. Like these ticks where it moves up or down 4 ticks all at once happen a lot more often. And I hate that. Hate that stuff. How should expatriate? So I think that absentee voting can still be a thing. But absentee voting is like so totally different, right? Like you have to request it, you have to send it in by a certain time and all of these sorts of things. They're very different from like what they've been doing here in Utah for a long time, where everybody just gets sent a ballot in the mail and they encourage everybody to send them in. So here's the deal in Utah. Let me explain why Utah is so weird and unique with this. Utah is a very conservative state. And if you just kind of let things go on the way that they are, you get extremely conservative legislature laws, etc., right? Like the liquor laws in Utah are pretty wild. I like it that way because I don't like there being drunk people in the streets. I don't drink. I don't care for people that do drink. For me, it's okay. I get it. Like people's freedoms and things like it's just like not an issue that speaks to me. Okay, but that's how conservative the legislature is, right? Well, the way that the system used to work was, there would be caucuses and then there was a convention. And at the convention, the delegates would vote for who the Republican nominee were going to be. If there was a strong enough majority for a candidate, they would just become the candidate and there wouldn't have to be a primary. And if it was really close, then there would be a primary. The problem with this was that the people that will go to convention tend to be pretty highly engaged, political people like myself that know what's going on, and they grill the candidates really, really well. And so a lot of these kind of establishment, I'm going to call them establishment types, but it's more like they're Republican, but they don't really vote all of the Republican priorities that we want. It's like if you were like a dyed-in-the-wool Republican, what was the issue? Like abortion. Okay, like if you're a real Republican, wouldn't you vote for a ban on abortions after 6 weeks or something like that, right? And you get these Republicans that wouldn't be, on certain pet social issues in particular, they would be liberal or moderate, right? Rhinos. Yeah, I don't want to call them rhinos, but I think that a lot of people would call them rhinos, right? But it's not even so much that they're not Republicans. Really what it is it's rich people. It's somebody that they've had a business or whatever the deal is, and now they want to go into politics for whatever reason. Even though they don't really know anything about what's going on, but they just have that thirst for power for some reason, right? And what would happen is the delegates would never pick those people. You'd get a guy that had been like engaged, working the conventions for a long time and understanding the delegate system and all of that stuff, and or actually knew about the policy. Like there's some people that they go to college for like city planning and things like that, right? And those people would go up against the business guy that just has the money. And the business guy would lose every time because you had to talk to the delegates and the delegates wouldn't go for them. It was so obvious that the other guy knew what he was doing, right? And so that resulted in a legislature that was super, super moderate, super, super conservative. And I would even say more conservative than Utahns actually are, to be honest with you, which is kind of weird. But I digress. Some people say it's because, only the hardcore conservatives go to the convention. That's bullshit. Because they did all of these things to like get everybody to go to the caucuses. And that absolutely did happen. And the results that came out of the convention were still really conservative. Like the reality is that the closer that the people get to the candidates, the more conservative they tend to be. The more conservative of a candidate they tend to pick, which is kind of weird, but it's not what you would expect, but that's been my experience. So the moderates in Utah, the rich guys in Utah, they needed to do things to fight against the hyper conservative, trend. And so how are they going to do that? Mail-in balloting. Like you need to get more of the moderate and or liberal people that like don't vote because they don't think it's worth it, sort of a thing, right? You got to get more of them to vote. And so these rich guys, in order to improve their political power, pushed through the mail-in balloting. And guess what? Average person loves mail-in balloting. Average person doesn't want to have to walk down the street to the local high school and vote in person. They don't like doing that. They love being able to just send it in the mail. So you get mail-in balloting in Utah. And we've had it for a long time now. Like we've had it as far back as 2012, I think. More ballots sent to politically detached people who know nothing, kind of people who take less than a sentence to convince to vote one way or another, whoever canvasses and convinces. Yep. It's totally true. With the mail-in ballot thing, and then if you allow ballot harvesting, then it absolutely turns into who has more resources to go out and harvest more ballots. Because the number of ballots out there, like only a third of people vote, or like even at most 66%. Like the high mark for participation in elections is like 66% in the United States. Okay. So if you take that 30%, okay, all of those people have a ballot. That means that there is no limit to the, you know, like, you are not going to reach that 33%, right? It's too large. It's too large of a group of people for any organization to reach all of them. So it might as well be infinity. It might as well be infinity. And so, yes, that's so many ballots that you can get that it turns into which organization has the better resources and plan to harvest more ballots. 100%. And that's not, I don't think that that's good for society. Like, I don't think that an election hinging on who has the best election canvassing organization is like going to lead to better governance. You know? But there's, you know, like, when I think about democracy, why is democracy in general an effective system? It's because it aligns the power structures with what is good for the people. That's the benefit to democracy. When you have countries where, you know, like, all of the money in that country is made from one venture. Like, let's say they mine oil there, right? And all of the money in the country is made from oil and nothing else. You almost never have a democracy. It's almost always a dictator, and that dictator is basically a puppet controlled by the business interest, the oil, right? But when you have a democracy, it shifts that, and now the decisions that are made have to be for the benefit of the people, essentially, right? And so the more engaged that you're able to get your electorate, generally, the more in line the decisions that are made should be with what the people need or want. But you know, the American system, I guess we do that okay, but there's certainly some holes in that, right? Because there are some places where you live, you know, the majority is so solid, they're going to win every time. It's like almost no point in you ever even kind of voting. And so it like disenfranchises like 45% of the people in that area. Right? And so you don't always get what you want. And then on top of that, like the business interests, those are one of those things. You know, people are going to kind of vote in that way, even though they don't realize it. Here we mine war and have a dictator that's beholden to the defense industry. I don't think that the defense industry is as powerful as everybody makes them out to be, but okay. Well, in the West, you know, you're kind of getting into like how specific of a definition do you want to be, right? Like America is a republic, but we do vote, we do have democracy. Okay, so yes, we have democracy in the West. Is that perfect democracy? No. Tomorrow is a holiday. You're right. We'll still be here though. That we can do that programming tomorrow. Not going to change my schedule. Plus, I don't think that I get that day off work. And yesterday, actually, I should double check here. I haven't seen any. Oh, okay. I had, man, like everything was. I think I don't know how much the customers would have noticed, but man, yesterday we were pants on fire everywhere, and so I'm expecting more action this morning, but it looks like nothing yet. Usually it's around 8 o'clock my time when people like start coming in and are like, okay, when activity, because it's like, okay, like you might start work at 8 o'clock, 8 or 9 o'clock, right? But like, when does activity at a car dealership start? It's much later, so it's not really until like 9 or 10 o'clock my time that things really start to heat up. Figured mid-morning into afternoon action might be muted. Well, I do wonder if the action that we're getting ends up like, maybe I should be treating this like a Friday non-farms or whatever, that like they made their move on retail sales and now they're done. Because I really do not see evidence of like other flows coming in and participating on this. There was the S&P 500, but that was just the open, and now it already looks like it's peaked. Should put that on our list. Holiday tomorrow. Pseudo. I mean, I don't want to disparage Juneteenth, but it's kind of a pseudo holiday. Like, not everybody gets it off yet. Okay. It's a weird holiday. And it ends up being in the middle of the week, and like there are other holidays that are in the middle of the week, but they're like the 4th of July, like they're super major holidays, right? Well, I really don't think that really anybody celebrated this holiday before the big push to make it a thing in Congress happened. Like, it's supposed to be for when slaves in Texas found out that they were free, but my wife, she had never heard of the thing. I'd spoken to some black people in Texas. They never celebrated it. Like, it was a political thing, yeah. Like, it was something that maybe some people in Texas might have heard about, but like not really anybody was actually celebrating it. And turning that into, yeah, I don't know. What, should I really spend too much time criticizing it? Why not? As nothing else is going on. Having that be the day that we celebrate like the slaves being freed, to me is kind of like, like, shouldn't it be when the Emancipation Proclamation was actually signed or something like that? And like, we can make it a bigger thing and not call it Juneteenth, which like has absolutely nothing like Emancipation Day. That's a holiday. Okay, Juneteenth is like learn English, guys. Come on. On Facebook, I got a couple of gay friends I went to elementary school with, and they don't change a thing for Pride Month, but then their straight, white, progressive female friends, rainbows everywhere. So you know what? I want to research this. I saw a story on TikTok that basically suggested that women on birth control would vote and like supported different policies from women not on birth control. And this story was insinuating that the policies that women on birth control were supporting were less what is the word? Like they were more likely to vote for things that were like detrimental to the community as a whole. But I forget the word that you would use. Because, like, how do you determine what's detrimental and not? But, oh my gosh, I can't even. But I was like, that doesn't make any sense. Like, the example that they gave was like, they were more likely to vote for open border policies. And that does not make sense to me at all, because my experience with a woman that's about to give birth is that they become kind of like, I would almost call it broody, like they want to get the house all set up perfectly and they just want to be around their family and like nobody else. So like, why would they support like more immigration? Doesn't make any sense. Yeah, nesting. I call it brooding because like when a chicken really wants to just sit on its nest and do nothing else, I call it brooding, and that can be a problem sometimes. You have to get them to get off. The core problem of all politics is that most people are socially motivated who aren't self-aware or holding the views of whoever around them. They spout their insecurities when challenged to preserve their worldview. I mean, I'm not going to say that that's not a thing. The thing that bothers me about politics is that a lot of the things that I see discussed and that people get really animated about are not necessarily like the biggest problems that we should be trying to tackle. When I go in and I look at our American system right now, I see a system that, you know, any system that you build is going to have certain outcomes and certain optimal strategies to take advantage of that system. Maybe in some respect, it's good to just constantly be having the system changing so that nobody can benefit from that one setup too much. Okay, but it's become extremely difficult since the 90s to change anything in Congress, and so now things are like really cemented, and it's very difficult to change those systems. And lay people don't understand anything about these. So the major problems that actually need to be addressed to kind of solve some of the problems that we have are things that you have to go in and describe. Here is what all of the rules are for the law, and here are the strategies that people use to take advantage of that, and here's like the math. Like, it's way above what the average voter can keep interest in. And so you're not talking about that, and instead the politics all boils down to essentially cultural issues that, like, I'm not even sure you can do a whole lot about sometimes. So it's like, you know, this thing that, like, well, a lot of people are just holding the views of people around them, and they will spout their insecurities when challenged instead of because they don't actually have logic and like, yeah, of course that's a problem, but I don't feel like that's the big problem. Like, that's just a consequence of the average person can't participate on the level of discussion for the things that are actually really a problem. And so they latch onto those because they're bored. Right? like going back to this stuff that Uzi was talking about, like, it is absolutely a thing. And for some reason it's women in particular, and I'm really interested in why that is, because I don't think that I have a really solid. I think that a lot of people have theories about why, and a lot of those theories would probably be really offensive to the women that you're talking about. But I have never seen a study that really conclusively proves to me why you get this. Okay, but there are people out there that are participating in certain cultural issues or whatever the deal is that aren't actually that big of a deal, and they're just bored. Like, if you're naturally predisposed to be anxious and there's nothing to actually be anxious about, your mind will invent it. Your mind will go out and find it. So it's like, my generation, millennials, we were trained very hard in school, like, to fight racism, and that this, you know, there was racism in the past, and we're not going to be like that, and we need to resist those things. And so then when we came into this world where, like, racism wasn't really such a huge problem, we invented it again. we invented it again because the brain gets bored. And you participate in that instead of like the real issues. I give you an example is like, you know, people complain about 2008 and derivatives and all of these sorts of things. And I'm like, well, look, if they included the impact of your trades in the margin that you had, so that when you own options positions that are in the money, they don't give you as much margin as the full value mark to market. It would have to factor in your execution. That would stop those things from happening. But this is too complicated for people to talk about. And that's like one of the biggest issues in the markets today. That and share buybacks. You can make white women think anything as long as it makes them feel good and makes them socially popular. Women hate to be disliked. Men, on the other hand, well, being disliked is kind of our default, so we're not as prone to it. That's a good theory. It's a good theory. So, number one is like, how would we prove that? And number two would be, okay, but then why is it that the things that are popular became the popular thing? That it became popular to be this, you know, social justice, virtue signaling nonsense. So I think that it is true that women in general tend to be more what is the word? I'm sorry, there's a very proper psychological term for what I'm agreeable. It is true that women overall tend to be more agreeable. So like the difference between men and women on agreeableness is like not huge, but you know, those small differences can lead to like huge differences on the end, so that almost all of the really agreeable people are women and almost all of the really disagreeable people are men, right? Okay, so that's the thing. That's the thing. But how do we prove that that's what's driving women's political positions? Right. In other words, you have made a logical conclusion, but how do we prove it empirically? Right? Because just like the market, sometimes what we think are logical conclusions end up being wrong. So we still need to back it up with empirical data. Because the problem here is that there are many other theories about what is driving this. And like, which one is right? Or like, to which extent they're all, Because here some people are saying that it is because they're on birth control, and birth control is affecting the way that they vote. And some people are saying it's because they don't have kids, and kids are affecting the way that they vote. And some people will say it's because women are more compassionate, and so they're voting for things that they believe are more compassionate. So how do you prove it? Empirically. So, and this is another problem that I see in society that like really irks me, is that when we have an issue like this, people will say, oh, well, it's because of this. And they think about it logically. And then like, that's good enough for them. And then it's like, we never dig further. And so we don't actually ever come across the truth, especially when there's like different people who disagree on it. Everybody is confident in what they think, and that's good enough for them. And, so who's going to go and do the study to actually find out once and for all what the truth is, right? Like, there's only so much. Yeah, I see. Like, I'm not even sure if there is a really easy way to empirically prove this. Like, how do you show that agreeableness is the major deciding factor behind why women are voting more Democrat, essentially? Or is it even the more Democrat? Well, maybe it's woke. The more agreeable you are, the more likely you are to be woke. So, like, if we designed a study and we went and we profiled the personalities of a bunch of woke people, and then we'd see whether they were more or less agreeable than the general population, then that could maybe be presented as possible evidence supporting our theory. But then I think about the people that are like the most woke and are out there like in the streets protesting and stuff, and I don't think that they are agreeable people. You know what? I think, honestly, so here's one of my theories that I wish I could prove. I actually think that there probably would be ways to prove this, but it might require studies that nobody's interested in doing right now, or it might require studies that might not be entirely ethical. But I digress. I think that when I see protesters in the street like yelling and screaming at the top of their lungs over various things like Donald Trump was president or whatever it is, I see autism. That's what I see. So I see autistic screeching in the streets. I know that this is like a meme, right? Autistic screeching, right? But it is totally a thing. And what I see is that neurodivergent people that are autistic and ADHD can be very easily hijacked and manipulated into supporting extreme causes. And so you get these autistic and ADHD people kind of like driving these extreme movements then at that point. And that's why they go so far off the rails. Because as an example, so here's the piece of data that I would cite as like the origin for this theory of mine. Transgender people are like 66% more likely to be autistic. Like the incidence of autism amongst transgender and transgender activists is insane. Well, that's exactly the sort of thing that I would expect an autistic person to have difficulty with. Because, again, autism is about, like, your brain develops differently. ADHD is like, you're not paying attention. And so there's data that your brain's supposed to be processing to understand things like certain social cues and stuff, and you just miss them. Okay? So you don't develop those things. Autism, it's like your brain just can't develop it for whatever reason. And so it's like a machine learning network, and you're passing data into it, and their machine learning network has issues with that. And the sorts of things that part of the brain is good at is like social things. Understanding groups of people, understanding how other people might behave or think, being able to talk in dynamic situations. Like, those are the things that part of the brain is really good at, and that we evolved that part of the brain for. So when you're looking at something like gender differences, right? The concept of gender as a whole, and like, if we accept the gender activist definition of gender and sex, okay, like what the difference is between gender and sex, those are things, and where do I fit within that? Those are things that autistic people would struggle with. So I straight up think that there are autistic people that are kind of like being groomed and or, you know, like hijacked into this transgender movement because, you know, they have this condition. I have some of it, and it's basically the part of your brain is smaller than it should be, so you end up seeking validation, but you can't actually feel it. So, oh yeah, Legion. That's funny. I mean, that's totally ADHD. Is like with ADHD, like social praise is like a really big driver for you, but then when you do get the social praise, it doesn't really do a whole lot for you. Yeah, it's totally a thing. It's totally a thing. I'd put money on it. Wow. I mean, we have one piece of data to support that kind of conclusion, and you know, somebody might argue that I'm taking it like way too far, perhaps. Okay, but so, and I will take it a step further. Okay, when you are on the internet and you're arguing with somebody on Reddit, you don't know if they're autistic. When you're on the internet and you're arguing with someone, you don't know if they're 40 years old or if they're 12 years old. And so I think that a lot of the cultural societal issues that we have come down to anonymity on the internet and people not having enough context to be able to interpret the things that they're reading. Right? So you read something and you know that it's coming from a 40-year-old versus a 12-year-old. You are going to read it differently. You're going to interpret it differently because that's context, and that's how the machine learning system works, right? Like, why is it when you get on Reddit and you look at these different issues that everybody seems to have like just these crazy unhinged opinions about everything? I'll tell you why. It's because they're fucking kids. They're literally like junior high kids that you're reading the opinions of, and they have no clue what's actually going on, especially when it comes to politics. I tell you what, because I listened to my son talk about things, and like his understanding of what's actually going on is really loose, right? Like he will take one kind of news story that he saw the headline for and make a bunch of conclusions about what's going on based off of that. And he's not reading the news deeply enough to really understand, you know, like everything that's going on. Like this whole thing with that we had earlier about mail-in balloting and how that works. That's like a perfect example. Most people don't understand all of the different rules that are involved, and that like, oh, well, the counting continues several days after the election because the votes, you could have sent it, you could have postmarked it on election day, and it takes 3 to 4 days to get there sometimes, right? And but everybody treats it like they read it on the internet and they just treat every comment as the same. They don't know that it's a kid. Dude, if Reddit was you have to be older than 26 to participate, it'd be like a completely different story on the internet. Be a completely different world. I think that one of the biggest things that leads to like why does our live stream go the way that it does is because we mostly only attract people that are in their mid 30s and 40s. So that's when you have enough money to do stuff like this. I have 2 friends on the spectrum and both hold mainstream media views. Yep. This isn't to say that like autistic people are stupid and that everything that they say should be dismissed. It's just you kind of have to understand the condition itself and like what kind of issues they're prone to be able to interpret what they're saying useful. Because autistic people, if we take the evolutionary psychology view of it, autism exists for a reason. It's because some of those traits are beneficial. In fact, I would even argue that some of the autistic traits are becoming even more valuable in our society. Because, you know, somebody that is autistic or ADHD, and I think that this drives a lot of my personality. Like, I have medication I have a lot of systems and everything, so I'm not really impacted by ADHD in that way anymore. But I do still have some of like the personality traits that I consider good from it, right? And one of those things is like being able to take a strong interest and really truly deeply understand something and follow everything about it so that you're really truly informed about it, right? Another one is just being like hyper vigilant. So with ADHD, you lose your focus, and so I just constantly trained like the willpower part of it. So you have somebody that, they're willing to get really deep into a subject. They don't give up on it. They just keep pushing and pushing and pushing towards whatever their goal is. Those are things that are like highly beneficial in our today's world, right? Being, because I have that like heightened sense of justice, I'm like stick to the rules really, really closely, can excel in like structures and things like that, right? These are all things that can take you to positions of power, and then you're successful, you make a lot of money, you're more likely to have kids that passes those genes on. And even if you're not like full on autistic or ADHD, it's still like some of those traits get passed on, right? So like you need autistic people, but you also have to understand where, they don't have the same kind of fuzzy logic, amorphous thinking that a regular person does. And so there are certain things that they're just not going to understand, or they're not going to be able to handle live very well. I have found a way to measure the market. That seems incredibly vague. Measure what about the market? Let's hear. Imagine the power of psychological warfare at influencing people's perspective and views via social media. You know what? When the Palestine, when tensions really rose in Palestine, there was kind of this shift amongst the politicians against TikTok, and it's like, what is that all about, right? I keep getting on TikTok some of the most unhinged pro-Palestinian stuff. Like some of it really is like truly insane, and they're usually just pictures. It's usually a picture with like a tweet or something like that, and the tweet is like, actually, like, you can't say that you're invested in peace unless you are committed to possibly destroying the state of Israel, or Israel not being a state anymore. And I'm like, are you really, like, how can anybody say that? How can anybody in the United States say, I'm okay if Israel's not a state anymore? It's just like mind-bogglingly insane to me. And I don't agree with that stuff whatsoever. And I scroll past it, it keeps showing it to me. So like, is TikTok trying to put its thumb on the scale towards Palestine? I think it could be. And I can see where China might, see strategic value in that. There was a South Park episode lately on Paramount. I haven't watched it, but I've seen people talking about it, that where Stan's dad like becomes an influencer, and they put the influencers up on a stage, and like countries and companies are bidding on them and stuff. And then once you're owned by one of those companies, like, you're controlled on what you can and cannot say and things like that. I have never been paid to like say this or not say this. I've done things where like I did a sponsored video and I worked with them to, get the video right and that they're happy with the video and everything. But never anything where it's like, if I were to say something or not say something on stream, that I could be sued or something like that. But it sounds to me like some people are saying that like these big mega influencers that have millions of followers, that's totally the way that it works, that they have like contractual obligations to make content about certain things and not talk about certain other things. crazy. So how much are we being influenced in that way? And that's the scary part about it, is that because this is not out in the open, we can't really know how much we're being influenced by that. Sorry. So I missed here. The intervals between moves. Okay, so let me explain something. There is, generally speaking, we can predict our impact on the market. So if I need to buy or sell a large amount of something, I can calculate out what that's going to be. Okay. And the formula, the most basic formula that we use is this. It's the impact. Oh, hold on a second. I'm gonna move this over here. Moving on me here. Let me do it right here. The impact of Q is equal to Y times the volatility times the square root of Q, which is the size of the meta order, over V. So what this says is how far a stock will move is based on the average volatility for that stock, a scalar that's unique to that stock, and factors in all sorts of other things that they've studied but don't really need to get into. And then the size of how much volume you're trading relative to the total volume that is trading that day. And that determines how far the market moves. So essentially what I'm saying is this. Any kind of trying to measure the market and saying the market moved yay much, and you might say it moved this much relative to what the volatility at that time was, or anything like that, is not really very useful, because the thing that matters, the thing that really truly determines how far the market moves at any given time, are the things in this formula. And most particularly Q. That is, if we have a large institution and they need to buy or sell, or we have a group of traders that they want to buy or sell based on a piece of news that just came out, the number of orders that are going to come out, that's the thing that really matters. And trying to measure how many dollars or ticks it moved is going to be inconsistent, because the liquidity conditions and so forth are different. But if you look at the number of orders, that is consistent, relatively consistent. So you can predict the number of orders, and then based on the market conditions, predict how far it's going to go. So I don't know what your exact measure is, but just based on what I know about the markets, it's kind of doesn't sound that interesting to me because of that. Black-Scholes is based on Brownian notion and effectively creates a distribution. Well, yes, but you realize that Black-Scholes is effectively wrong, right? Black-Scholes is useful, and it was a big development in the market, but ultimately the Black-Scholes model is a model and has some extreme inaccuracies in it, and there are actually much simpler models that could give you better options pricing than Black-Scholes that are simpler. Now, if you're interested in levels, one thing that you can do is you can look at where people have options positions open from, and based on that, you can sometimes game out when they will need to start buying or selling more shares as the gamma changes, right? If I'm a market maker and I sell a ton of options at this certain point, right? Well, if the stock keeps going up, eventually the gamma will change the delta, right? Because gamma is change in delta, right? So right now, I only have to buy 0.6 shares for every option that I sell them. But if that changes and now all of a sudden it's 0.8, that might be additional shares that I need to go and buy. And so you can kind of calculate those levels. So if you're interested in levels, I would look at that. That's something that we know that kind of can determine things. And there can be like specific levels where the gap, especially when we're in a bull market and we turn into a bear market, there are like certain points at which both momentum traders get involved, but then also all of the options people have to like start selling shares, right? And it just like it accelerates the move. Yeah, you could post it in Discord, I suppose. I don't know. I feel like too dismissive, but I don't know. Normally I would just be like, okay, sure, send it over a program. But I've become jaded about those sorts of things. But if you send it to me, I'll try and program it up for you. And backtest it and show you why it's maybe not actually as useful as you think it is. Well, let's see here. Hey, Paul, do you know what happens with influencers in Dubai if they even say it's too hot practically? It's a big obvious example if you know how that can go. Wow, really? I didn't. And they did they get like jailed and stuff? I've never heard of that. That's crazy, man. Well, it is hot in Dubai, but it's a dry heat. It's fine. Wait, is it a dry heat in Dubai? Because they are by the ocean. My nose itches so much this morning. Okay, so I just discovered something about my Wacom tablet. Even though I have it like right here, that is too far for me to reach to write things on. So I still have to move it over onto the table. It's a lot easier than it was, but then there's this cord here. I think I got more room on the cord though. Hold on. Okay, there. So now I should be able to very easily drag it all the way over to here and like put it literally right up by my mouse and draw pictures. Yay! Oh, come on. Well, now the click is not working. Circle thing works. Maybe I'll just unplug it real briefly again and... .8:30 now, so we got about 30 minutes left. That last discussion that we had, that went on for a long time, didn't it? So I had another thought about that, though, because you were talking about how people reflexively respond. There was this thread in Change My View that was like, Donald Trump is going to turn the United States into a fascist dystopia, yada, 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 yada. And they were going on about like the 2025 project and all of these sorts of things. And it was really curious to me. I went through the whole thread, and nobody was saying anything about like what the 2025 project is, or like what the policies that are in it are, or why that's like fascist. I was like, okay, if those policies are fascist, don't you think they would be important to talk about like why those policies are bad and will lead to this awful world that you're talking about? That kind of suggests to me that you're just like, you're getting this knee-jerk emotional reaction, and that it's not actually like real. It's also interesting that, you know, a lot of people are like, well, Donald Trump was president before nothing bad happened, but now they're like, well, yeah, except for that he will have more power this, you know, like he'll be more effective this time and everything, and so he'll actually be able to do what he wants, and that's why it will become will become fascist. Okay. It's like those street videos. Yeah, except for those street videos go and find like the most clueless people they can, right? What the F is going on over here? Hold on a second. Oh, it was just Melissa. I expected to see some kids in the teal. Kids like, what the heck are you doing? No, but it was my wife, actually, so I don't know. Ah, man, I need to practice with the pad more, guys. My letters ain't very good anymore. You know what? Turn off, where is it? Huh. Each tool tracks its own size, mouse ultra size, Windows startups, updates, telemetry, expanded quick colors, ghost mode, toggle keys. How do you disable the variable size? I guess I could do it from the tablet. Oh well, whatever. A fairly significant tick down that just happened there, wasn't it? Got a little click with it. Come on. Why is it carving on me? Well, my handwriting is terrible now. And I kind of feel like I really want it like right in front of me like this. That's better. I'm kind of wondering, so like we started to get a decent amount of uptrend going after touching the 16. But the cumulative delta was flat. And now this most recent few ticks down, actually a lot of selling on it. So are we actually getting a sell meta order coming in? That's kind of curious. Okay, so that's better, but now I feel like my hand is too tight. That's good, better. Well, the issue is I'm not sure that is actually like any thing fundamental going on. It might have just been like longs giving up on it or something. Right. So let's see here. What have we got to do here? We do have to go back and check GameStop, right? It looks like they were able to weather the open okay, actually. Oh, yeah, actually, they're making it back up to some of yesterday's previous prices. Do you think anything's going on over there? I like these guys kind of give me a better idea of like when something's going on, but probably there's not. I'm here for the mother of all short squeezes. Otherwise, I'd put my GME money into Nvidia, of course. Okay, well, since we're getting closer to the end of the day here, well, Zero Hedge is kind of giving me issues. Biden officials to attend Bitcoin roundtable in DC. Oh, maybe that's why Bitcoin is bouncing here a little bit. Retail sales disappoints. And Biden announces deportation protections for some illegal immigrants, which was expected to be released. Okay. Bank of America's practically omniscient analysis were more in line with consensus this month for their U.S. retail sales forecast, with a return to growth expected in May's data. Notably, however, consensus and Bank of America were overly optimistic as the headline retail sales rose just 0.1% month over month. Worse still, April's 0% change was revised down to a 0.2% month over month decline, leaving the headline retail sales print up just 2.3% year over year. X Autos, the picture was worse, with sales dropping 1% month over month, and X Autos and gas stations rose just 1% month over month versus a 0.4 month over month expected. Gas stations and food services spending were the biggest downside drivers, offsetting increased spending on motor vehicles and non-store retailers. Interesting that we're getting increased spending on motor vehicles. So, like, as the vehicle market bottomed, the crucial group, which is used in GDP calculation, also disappointed in May and April, was revised lower. Not a great start for quarter two's GDP. That is the fourth monthly miss in a row. And finally, admittedly a crude approximation, adjusting the nominal retail sales print for inflation CPI, we see retail sales declined in May. So that's interesting. Okay, so this is a story. This is a little bit late, but they're talking about the University of Michigan Consumer Sentiment Survey on Friday. The University of Michigan Consumer Sentiment plummeted to its lowest level in 7 months. The index rating for June came in at 65.6, down from 69.1 in May, and under the consensus expectation of 72. In the current conditions and expectations categories, the survey fell below economists' expectations. Year-ahead inflation expectations were unchanged, but above the 2 to 3% range seen in the 2 years prior to the pandemic. According to the press release, long-run inflation expectations rose from 3% last month to 3.1% in June, significantly above the 2 to 2.6% range seen in the 2 years pre-pandemic. The survey indicates how weak the U.S. economy is and how consumers are feeling the persistent inflation. Joe Biden posted on X, zero. That was monthly inflation in May. There's more to do still, but this is welcome progress. A zero increase in June in the CPI reading is not in zero inflation in the month. Consumers in America may find these optimistic messages exaggerated and almost propagandistic. Furthermore, CPI inflation should have been significantly lower, closer to 2% months ago. It is welcome progress, as the president says. Not really. However, the underlying message of the X post is probably closer to it could have been worse. We must remember that the Inflation Reduction Act has perpetuated inflation as unnecessarily aggressive fiscal policies sabotaged the Fed's decision to reduce the quantity of money in the system. The federal deficit is fueling inflation and keeping the CPI measure above the level where it should have been for at least 12 months. Neo-Keynesians frequently point to the path of disinflation as triumph of the soft lending approach. The economy did not enter a recession. Unemployment is low. Prices are cooling off gradually. There is an evident counter-argument to this optimistic view. The United States economy would have recovered faster and consumers would not have suffered the flat real wage growth, loss of purchasing power, and crippling debt. The idea that government spending has strengthened the economy has no merit. Excessive government intervention is a direct cause of the unsustainable deficit, rising taxes, ongoing inflation, and weaker productivity growth. Well, yes and no. I don't know. This guy seems a little bit overly focused on that. Must be a Republican that's where all he cares about, but whatever. Something that bothers me about Republicans is that we have like one subject, the Laffer curve. That like you can reduce taxes and actually raise more revenue in some instances. And it's like they have formed that as the basis of all of their economic standing and understanding, and they don't understand anything beyond that. And it drives me crazy. Okay. Government stimulus can help and can be useful in some instances. But the general thing that like inflation should be 2%, not 3%. And that some of the things that Joe Biden is doing might be keeping it up there at 3% has merit. It's not the only thing that's going on, but that has merit. The U.S. consumer has been adding debt to maintain consumption, and credit card debt has reached new record levels. This is not a strong economy. I don't know if I agree with that per se. So, like, consumers adding credit is a sign that the economy is doing really well. That kind of says to me that people expect that they will be able to pay that debt off. And they had saved up. We had excess savings during the pandemic. So like, and debt as a percent of income was like record low levels. It's just normalizing. So that doesn't mean what you think it does. The problem is that the economy is weakening in the middle of an enormous fiscal expansion, and debt continues to rise at an alarming pace while interest expenses reach new high. Keynesian policies have weakened the fabric of private sector and small and medium-sized businesses. The discontent we are seeing in all developed countries is typical. Governments have focused on inflating headline macro figures, forgetting the average consumer and small businesses. Large corporations have been able to navigate these incorrect policies because of their financial muscle. However, family and small businesses are living a nightmare. Employed yet impoverished while businesses struggle to stay afloat. So what is the problem? Imbalances in the public sector will generate less growth, higher taxes, and more challenges in the future. Public debt is a tool for growth, but it has been a burden. Loading GDP with debt always ends badly. I don't know about that one. They've been telling me that for 20 years. They've been telling me that for 20 years. I don't think that their policy is very good, though. Like, the issue that I see is that we spent all this money when we really didn't need to. And now you have, like, this huge debt burden that will drag on growth in the future. Meanwhile, like, the economy is slowing. Like, it is slowing. And retail sales gave us another reminder of that, surprising us, right? Now, that's supposed to be like a normalization of things, but like, stuff can change really fast. Like, what if by the end of the summer, we're looking at a recession again? And then a recession just means take out more debt to fix things. It just makes the situation worse, right? Because you weren't paying the money back during the good times. So that's not Keynesianism. That's just bad fiscal policy. Man, you know, I mentioned that oil had momentum longs going into it today, and we should keep an eye on it. And I haven't really kept an eye on it, but oil is doing amazing today. Like, that's great. Okay, it's only $1 or so, but still, this is a good, strong, clean trend in oil. That's what we like to see. Nice, clean trend. Oh, a little bit of a turnaround in copper too. The S&P 500, though, after that initial rally on the open, is just kind of going sideways, and the treasuries are actually kind of struggling to keep those gains since the retail sales, and just doesn't really. This right here, that's not, that's not positive flows long that we'd be looking for. So yeah, we never took a trade, and it was good we didn't take a trade. I might have been able to have caught something if I was willing to risk the liquidity conditions. I might have been able to pull something off of the news. Maybe I should play those more often. I kind of like stopped playing those because I got burned a few too many times, but I think that I'm maybe being too cautious. You keep getting errors when I try and load the zero hedge page. Hindsight exception occurred. Cancel rendering page. Failed to execute remove child on node. Well, your JavaScript is completely borked, zero hedge. You should fix that. Forrest, how are you? I recognize that name. Wait, you were here earlier or like last week though, weren't you? Hmm. You know what? I should drink more water. I think I'm not drinking enough water here. Yeah, it's kind of been a boring session to be honest today, but I feel good. Today's my rest day. And it's this, you know what it is? It's this tree. It's sending me that spiritual energy every day now because it is so happy to be my desk and how good looking it is. I wish you guys could see it in the camera. Even if you could see it on the camera, it doesn't do it justice. Like, it's just got like this glow, like the way that the light reflects off of the wood is like, because everything else in the room is kind of dull. Right, like the you can kind of see over here the accent wall is gray, right? And it's a gray carpet, and I have those blue, but it's like a navy blue. But it's got like this rich brown reflectance, and it just changes the whole feeling of the room. I like it. But you guys can't see it. What I should do is I should make a second desk that goes behind me. Right? I can make like a really nice, elaborate cherry desk or something like that, or maybe like a walnut slab, right? And that would show in the videos. That'd be cool. And then I could put all my papers. No, actually, I think if I had a desk like that, I would probably just like put papers and crap all over it. Nah, I don't think I need that. Plus, I have so much room on this desk. Like, I could put papers over here. Be no big deal. Yeah. I could even do things like if I wanted to, I never added a stream deck because I'm like, I don't have anywhere to put it, but like I do now. I can just move these out a little bit and put it right in the center. Do you think it's possible to escape the randomness of the intraday market through a strategy? Well, so I think that you can predict intraday flows. Okay. I think that predicting intraday flows has more to do with knowledge and information that you'll have outside of the market. Things about how different institutional strategies work, what the current macroeconomic dynamics are, what the breaking news and economic numbers are, where CTAs are positioned, options positioning. Those are sorts of things that could potentially help you predict intraday flows and thus predict intraday price. But trying to predict the intraday price based on the past intraday price, no. I think that the market is too random for that to work. It's kind of like if you were out in the ocean and you're looking at the tiny little ripples on the surface. You're looking at these tiny little ripples, and then there's these slightly larger ripples, and you're like, these tiny little ripples that might tell me that like a bigger ripple is coming, right? And meanwhile, while you're looking at all of that, there's like a tsunami coming your way, and you're not going to see it because you're looking down at your feet, right? Like the flows that come in from institutions are so large that they just dwarf everything else. And a lot of that is, for all intents and purposes, random. Some of the flows we can't predict because, you know, you could predict it if you had the information, but it's information that we don't have. Like, you know, did this fund have more contributions or distributions that month? Right? Those are the things that you could predict its flow from, right? So for all intents and purposes, relative to like what the market has done that day, it's completely random, right? And that is so big, it washes out everything else that you're seeing. So even if there were like these patterns and stuff that you could get from the chart, maybe they do exist. Maybe if we were able to normalize things out enough that you could see those behaviors. But the problem is that these big whales matter more. So the only thing to really do is to predict those large flows instead. And everybody is trying to day trade based on looking at a chart and price action and stuff, and it's nonsense. Price action strategies mostly appear to be profitable because they take on excessive risk and not necessarily because there's anything to the patterns they're looking at. I'm waiting for the follow. Oh, here we go. Makes sense. I did some back testing of different risk reward, and they almost perfectly aligned with the 1 over x plus 1 calculator. Yeah, right. Isn't it crazy? So I never go through the. So let me write it up here. So just in case anybody's like not sure what we're talking about here. So the probability or your win rate, let's say your win rate tends to be equal to 1 over 1 plus R, where R is average winner over average loser. So if these are equal, then R is 1, and then your win rate is 1 over 1 plus 2, which is 1/2, so your win rate is 50%. Now, how did I get this formula? I derived it. You can say your profit is equal to your win rate plus, or what can we call it? The probability of a win times your average winner minus your probability of a loss times your average loser, right? But then we could say, okay, so where would you be break even? So then that would be where these two are equal to each other, right? And then instead of saying like, what is the probability of a win and a loss, I can say, the probability of a win times a winner is equal to 1 minus the probability of a win, right? Because the probability of a win plus the probability of a loss should equal 1, right? Times L, right? And then we can also change the W and L to be in terms of R. And anyways, I won't bore you with all of the math because I usually have to go and refer back to my notes to figure it out. But basically, it comes down to 1 over 1 plus R. And what you will find is that the performance of, if you are using set profits and targets on an intraday basis, the outcome of that system will have more to do with where your set profit and target are more than anything else. Which, in a relatively random market, is what you would expect. Okay. So a lot of people say, oh, well, if you just manage your risk, then that alone can make you money. Yada, yada, yada. Well, here's what happens. Is if I come in and I say my R, so the win rate equals 1 over 1 plus R. Well, what if R equals I will risk 2 ticks, but or I want to make 2 ticks, but I will risk 8 ticks. Let's say that. That seems reasonable in the treasuries, doesn't it? So basically R equals 0.25. So 1 divided by 1.25, and it should come out to something like 60 or 70, right? Or actually maybe it's 80. 1 divided by 1.25. Yeah, 80%. Okay. So you're going to win 80% of the time. Okay. Now here's the thing. Is that now we have to start, going through. So we could do a system and we could say, okay, so I will flip a coin. I will pick a random number. And if that random number is between 0 and 0.8, or let's say I'll pick a number between 1 and 100, and if that number is between 1 and 80, then it will be a win and I will go up 0.2, right? And if it's not, if it's above that, then it will be a loss and I will go down 8, like that, right? Well, there's going to be streakiness in it. So what you're going to see is it's going to be like, it's going to go up, 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 and then you get hit, right? Because this one is going to be less common, right? So we actually have pictures of this. Where did I put those? I think I put it in the stats channel, right? Let's see here. Oh man, that was like a long time ago. Oh no, wait, maybe I don't have it in that channel. Where did I put it? Oh, actually, I think I have it over here. I remember where I put them on my computer. Work. Come on. Python. Monte Carlo. Okay. Photos. Okay, so you get something like this. Right. So what this is doing is this is saying you're doing a combine. And you're just doing this randomly. Like you're just doing exactly what I just described. Like when I make money. So for this one, it's R is 0.5. So like 60% of the time you make 2 ticks. And 30% of the time you lose 4 ticks. Okay. And these is basically just plotting out. It will do that and then it will do it again. And it'll do thousands of times. And these are all of the paths of all of those different executions. It's actually better when you look at like ones like these. This one's a little bit more random, right? So this is, we're looking at tens of thousands of retail traders trying to do a combine, right? Okay, well, what you will see actually happens, and this is kind of deceptive, is like, okay, here are people reaching the target, right? But only 31% reach the target. This is to say, based on the combine rules, just like the profit target and drawdown rules, based just on that and random probabilities and your risk reward, right? 31% of people should pass. And why is that? Well, because there's streakiness. Like look, there's these guys that like they get everyone right and like it immediately goes up and they pass the combine, right? And then there's these other ones that like, immediately fail. Right? But it's kind of interesting that it's kind of like this teardrop formation, right? That's because the people that fail, they do so really quickly. Even though, again, it's 31.8% win rate, right? So basically, what happens is this risk reward like fools people because you'll make money in the short term, but you haven't experienced that drawdown that kills you. And then on top of that, and this is the thing that I think is really devious about the combines, is that people fail a lot faster than they pass. So for the people that do fail, they'll fail it right away, and then they're like, oh, I'll pay for a reset. Cool. Okay. The people that do win, it might take them like 2 or 3 months to do it. So then they're paying them for 2 or 3 months worth. Right? When you get into the math of the combines, it's kind of shitty, right? I wish when we were talking about combines, or was it yesterday? I had brought this chart up. But I was going into risk reward, right? Explaining how, having a low R strategy can kind of fool you into thinking that it works. Because, there is going to be a certain number of people that it works, and it seems like it just works amazingly well, right? It's just that most people, it doesn't work. Only 31% pass. And my understanding is that the actual pass rate of the combines is much less than that, which is kind of funny. So, meanwhile, you got all these people saying price action, it works. You just need to use price action. And it's like, well, if it was that simple, why aren't more people passing? And they'll say, well, because people are emotional and all of these. I feel like that just doesn't give people enough credit. It's just ridiculous. Oh, the strategy totally works, but they don't follow the strategy. You're telling me that these people, after a little bit of practice, that they can't stick to the strategy? It's because the strategy itself is flawed. And when you pass, you go and you think, oh, it was because me and I did all of these things. And then when they fail, you say, oh, well, it still works. It's just they weren't as in control as I am. Yep, and then after you pass the combine, then you have to pass another stage, so that's another filter. Yep. But the thing is that the numbers that we get from a Monte Carlo simulation, the point of all of this was, if I assume a truly random market, so I'm not even trying to say these are the random prices, I'm just saying you flip a coin, you make or lose based on the risk reward, right? What we actually get, the results that we actually get, are worse than the Monte Carlo simulation. More retail traders fail than the Monte Carlo simulation. So the market is worse than random. The market comes after you and does things to make you fail. Is what it means. So to get around that, you have to have a different approach, right? Because what I keep hearing from all the retail traders is, you just need to trade the pattern and whatnot. No, so it's random. There's no pattern, not intraday pattern. All that shit that you heard about patterns and moving it, that was like daily bars. That was like momentum portfolio. It doesn't apply to intraday trading, right? So you're going to have to mess around with things a little bit, right? One, you're going to need things that actually predict where price is going to go, and is not just, some random pattern that you data mined out of the market, but something that actually has a reasonable probability of predicting where the market's going to go, and information that comes from outside of the exchange that, is public information, obviously, but not everybody has. Yes. And predict things, that's part of it. And then the other part of it is you do kind of have to mess with your risk a little bit differently, right? You're going to want some trades that really, really run, and some that don't. And yeah, sometimes that might mean taking on a bit of risk and playing with the risk. And the way that you can kind of deal with that is you can take on a lot of risk, but only for a very brief period of time to kind of build yourself a little bit of room. And then that allows you to take risk on more risks so that you can get the runners to run, right? So you can mess with your risk that way. So if you're programming something, I would try programming something that doesn't have set stops and targets, that does something like stays in the market until it gets a counter signal. And you can still have a stop, and you can still have a daily limit and things like that, but you still have the ability to, have a range of losers and a range of winners size. let's hear. I signed up for the email, but I never got it. I did sign. Oh, are you talking about the strategy PDF? Oh, that's interesting. Well, you maybe check your spam folder or something. I don't know. How do I do that again? I can't even freaking remember. Wasn't MailChimp. I don't even remember the name of the service. If you message me on Discord though, I can send it to you on Discord. In fact, I think it's in the download channels in Discord somewhere too. But you might not want to dig. Just message me. I can send it. So I have it. Wait, let's see here. Where do I have it? Is it in work, website? Strategy. Oh, no, wait, that's not it. Documents? This documents? Yeah, I don't know where I put it. I'll find it. Or I could just download it again and do it this way. Docs. It was in the spam folder. Well, there you go. Because, you know, it is from one of those mailer services, but... I would not assign an entity to the market and make people believe it's after you. I mean, why not? I mean, I think that the reality is not that different, right? I think that I think that it's a benefit to you to come in and think about this from the perspective of like this thing. It's like this hive mind. And somehow it's able to know and it just comes after you. Because, you know, the reality is much more complicated. The reality is there's a bunch of different players and algorithms all trying to find patterns and take advantage of things. And, you know, as they do that, it kind of creates chaos and ends up creating a market that is seemingly random. But it tries to find patterns and like eliminate them. So anything that you think you're seeing here, it comes after it, right? It isn't actually a thing, but it might as well be. And once you understand that, you know, like one of the things is like, oh, I overtrade. How do I deal with that? Understand that the market is out to get you, right? If the market is out to get you, think about if you were playing, what would be a good example of like a game that we could be playing where somebody's out to get you, like, you know, well, I think. I don't know if everybody would understand this one or if my analogy here will be very good, but it's the best I can come up with at the time, okay? Like, let's say that you are playing poker. Okay, you're playing poker and you're winning. You're winning. So what that means is you've taken money from other people, right? Well, they want that money back. So they're going to be doing everything that they can. They're going to be watching you in particular because you're winning. They're going to be watching you in particular for a situation where like you're going to screw up so that they can make their money back, right? Like, you ever watch, what was it? Liar's Poker? Is that the name of the movie? Where there's this girl, she runs poker games And there's this one guy that they have like this group of celebrities that are playing, and there's this one guy that always wins, and like he's really cautious. He only really bets big when he knows he's going to win, when the probabilities are like really, really highly in his favor. But then there's this one thing that like triggers him or whatever, and it sends him into complete meltdown, like full tilt mode, and he just blows all of the money. And all of the guys that he took the money from are like, oh dude, like we need to go over to the game. I hear that what's his name is having a bad day, and we can make our money back, sort of a thing, right? Like that's what the market does to you. So if you're that guy that's winning at poker, and you know that everybody's out to get you, only put the risk on when you really have an advantage, right? Don't go and think around with the market when it's doing nothing and it's just going sideways. You go and you get in, and then the market maker lets it slip 4 ticks, and you're screwed. And you just die death by 1,000 cuts. Wait until you actually know something. Wait until you have a really good probability of predicting what that flow is going to be, and anybody would have to be a complete idiot to try and trade against you. Complete idiot, or just completely uninformed, right? Market makers pull bids and offers. A lot of it is these correlated instruments and stuff, but they do inject randomness into the market. That's what they do. So they have this algorithm, and this algorithm basically is, the output of the algorithm is what is the best price to bid and the best price to offer at. And that's it, right? But one component in that calculation is correlated instruments. But another component in that calculation is randomness. And so, yeah, treasuries in a really like summer action, as of late, it seems like it can just go move 4 ticks for no reason. And if that's your stop, kind of sucks. Okay, I went way too long. I didn't realize it's 9:16, but it is time for me to get going. And my guess is that you put the blame on the market. Oh no, what happened was I learned. What happened is I learned why the market behaves the way that it is. And I learned that there's no point in taking risk unless you have an explicit advantage. And so the reason why I say like the market is out to get you is because that changes people's perspective. Then they are less prone to want to go and take a risk unless they have that advantage, right? Because you think, unless I have an explicit advantage, things are tilted against me, because that is the truth. Unless you have knowledge that predicts the future flows, the game is tilted against you. Okay, I gotta get going. I'll see you guys tomorrow. We'll still be here for the holiday. We'll do some programming. We can discuss things. In the meantime,